Today, we're talking about the home mortgage appraisal. So, if you've gotten a mortgage in the past, there are some changes coming to the way that appraisal format looks. In addition to that, if you may have noticed over the years, if you got an appraisal done maybe on a home purchase 10 years ago, the cost of that appraisal was relatively cheap compared to what it is today. So, today we want to bring you some news that's coming out that will take effect in November. This will not be seen on any of the major news networks. You're only going to find it right here on this YouTube channel. But Stephen, let's talk about the appraisal process for a mortgage and what is getting ready to change. Now, I know back in the day, appraisals were like, hey, I need to get an appraisal done. You could call any appraiser you wanted to get that taken care of, get it back in a couple of days. And of course, when the whole thing happened in 2008, 2010, and all of the Frank Dodd rules came into play, and then the whole appraisal game changed. A lot of people really don't understand how that process works now. But in addition to that, we have increased fees and a new version of an appraisal format coming out in November. So just wanted to bring this up to our viewers and have you come on here, of course, and explain it in more detail. So I'm going to let you take it away, Stephen. Let's talk about what's coming down the road.
Yeah, absolutely. And I guess what's happened is compliance. And, from my perspective, when compliance enters the industry, it's for the consumer's protection, which I agree with, but it never protects the customer's wallet, because with compliance comes cost, and that cost ultimately gets passed on to the consumer. Just last month, we saw VA appraisals go from 550, and now it's a standard rate set per state. And here in North Carolina, it's 800 to 950, depending on the property type. So I guess compliance wins. But yeah, when I started appraisals, you had two choices. It was pay the appraiser via check, right? Some of these viewers probably don't even know what a check is, but old paper check. You would pay him when he came to the door. It was $275, or if it was paid at closing, it was $350. Now this was 23 years ago. For perspective, so there was some regulation, because what was happening is the bad apples were introducing outside funds and saying, hey, make this work, right? There was no regulation. So regulation is necessary. So, that came in to say, hey, we need to regulate who communicates with appraisers. We don't need lenders directly talking to the appraiser about value and expectations and putting pressure, good or bad, on the appraiser to perform, because through the research, a lot of those loans that didn't perform came back to bad data. So what's happening right now is we're getting what's called the Uniform Residential Appraisal Report, which coincidentally looks exactly like the Uniform Residential Loan Report. So the appraisal is now going to look very similar to the loan application, just the way the tabs, the data, and what Fannie and Freddie is saying behind this is that it's a significant modernization of appraisal reporting. So the industry is moving away from the old way they did it with their forms to a new dynamic, data-driven report designed to better reflect the property being appraised. And some of this is AI and technology, because data is more readily available to appraisers. And so a lot of people think that, that the appraiser is going to be at their house for 8 hours. Well, it's not an inspection, right? They're at the house for 30 to 45 minutes. All of their work is done in the research to make sure that the property, has the value. So that's the big change. And the industry will, bring this to market when it's ready. You'll see lenders starting to do that. But one thing I did want to talk about is understanding how your lender orders the appraisal. Because when the guidelines changed, we had to introduce AMCs, appraisal management companies. And so they're the middleman that kind of controls the communication. And Brian, I'm sure you've probably dealt with some lending and some AMCs over the days. And just like HOA management companies, there's really good ones, and then there's ones that you never want to deal with again, right?
Yeah, for sure. So for my knowledge, though, the AMCs are like your dedicated 8 or 10 appraisers.
Yeah. And mortgage companies handle it different ways, right? And there's actually, shocker, there's a lawsuit that's kind of spurring this, where a certain mortgage company is actually suing a AMC, because the AMCs also control the price of the appraisal. So, what happened is that $275 or $300 appraisal immediately went to $450 and $500 and $550. And now we're talking $800, and certain things are into the thousands. What didn't change is the appraiser still gets their same cut. They still get $275 to $300. It's the AMC that's keeping the money. So I think regulation is coming in to say, all right, well, who's controlling this price? So what we do at Alcova, we don't use an AMC. We have a independent panel of local appraisals. So what I cannot do as a lender is call Bob Jones, the appraiser, and say, go do this report. But we can have verified and vetted appraisers on our panel so that I can say, hey, the people that we work with, if they pick up the order, it's kind of like Uber, right? Like an appraisal order gets sent out and the first person to pick it up, that's their report on a rotation. So we like to work with people who are local to the, wherever the property is, right? Local to that property, because there's also nationwide AMCs who are in it for the money, right? So it's a good question to ask your lender early on. Hey, when I have to order an appraisal, how does that happen? Do you have any idea what the cost is? Do you work with an AMC? Do you own your own AMC? Do you have a panel of people that you know, like, and trust? Because, Brian, you can attest, there's two main things that kill a deal: inspection and appraisal, right?
Mm-hmm.
So if your lender can have confidence on how that works, that's a quality that you need to really understand when you're getting into a mortgage and buying a house.
Yeah, there's no doubt that a home inspection would be the other piece of the puzzle that can ruin a deal, which is why we always have a handful of local inspectors that we use. Of course, we give our clients the choice between who they want to use, but we only deal with local people. And that's also crucially important why you also want to use a local lender. We've had disastrous situations on the real estate side with dealing with lenders that are located in Dallas and anywhere else in the country. And it's just so important, because when you need to get a question answered, calling into a call center and getting someone different every time, it's a dang nightmare. So guys, always trust your local partners. We're here to give you guys the best service we can with our knowledge and our expertise and the people that we deal with. And that's also crucially important when you're talking about the appraisal. So make sure, if you're doing a loan, ask your lender important questions about that appraisal, or just call Steven, reach out to him directly. All of his contact information is down below. If you guys need my help and my team's help in finding a home, we would love the opportunity to serve you. All of my contact information is below as well. But guys, thanks so much for watching, and we'll catch you guys in the next video.